Welcome everyone. Thanks for joining. Apart from me and Tahir, who have been speaking on these sessions today, we have special guest speaker Akash Mann. He is joining from Edmonton, and he would be sharing his expertise in long-term investing. He has a Instagram channel where people follow him, and it's our opportunity to learn from him today. So over to you, Akash.
Thank you, Kamal. Thank you for the introduction. So I won't say myself as an expert, but yeah, I've been investing since a few years and going in for the long game. I'd like to start how I got started with investing and how I came across the stock market. I see majority of us are from the Asian background. Certainly some would be Canadian born or should be immigrants. When I landed first in North America, and my first thought was like, I have a good job and I'll save money and I'll keep it in the bank. Then when I went to the bank, I saw the interest that they were paying out. I said like, this is certainly not something I'm looking up to. And it was inflation rises around 3% every year, and the interest rates are not more than 1% in any of the banks if we see long term. So and that's where I thought like keeping money in the bank is not the thing. So then I start like a random guy. I started looking up on internet like how I can grow my money. Then I started coming across some YouTube videos. Then I saw that you can make money through dividend stocks and stock markets. Then I thought like, yeah, these videos are fine. Like I have to educate myself. Then I got a hold of a couple of financial education books, and I started to look up like how what kind of strategy would I have when I start investing. And the main thing that caught my eye was dividend growth investing. So that was the type of investing attracted me most, and I thought this is the thing that I can go into long term. So I'll start by using a small example. So we know everybody on the call knows Warren Buffett, the greatest of all time. I personally call him the greatest of all time of the investors. So he is a long time dividend investor. So Warren Buffett, his most famous holding is Coca-Cola stock, traded as KO on the New York Stock Exchange. So he purchased 1 million stock shares of Coke on in the year 1988. So at that point of time, the price of the Coca-Cola stock was $2.50, and the dividend was only $0.08. So he bought in 400 million shares, and at that point of time, the yield was 3%. Even today, the yield of Coca-Cola is around 3.51. But over the time, like from 1988 to 2020, it's around, I guess, 32 years. So the capital appreciation, what we say on the stock price, so from $2.5, the all-time highs for Coca-Cola was $60. So I guess it's more than around 2,100% capital appreciation. Sorry. And the dividend, the Coca-Cola has grown their dividend 33 times over the years. So the dividend from 0.08 has now gone to $1.6. So for Buffett on that dividend, it's gone 1,900 times. So we see it's just buy and hold strategy. There's no big thing to it. But the quality of dividend stocks have to be mature enough that they can sustain long time. And to a matter of fact, our Canadian market has a lot of big names that has done so. And if I take an example of BMO, BMO is the oldest bank in Canada that has been paying dividends since 1829. So you name it, world wars, you name it, any pandemics, you name any president's change, policy changes, they have seen 2 centuries. And till today, BMO is going solid and paying out dividends. Yes, their dividend growth history isn't that of 200 years, but their dividends have never been cut. So that is something that I saw, and how I see dividend investing is like my shares are like a cow. So when I get a cow, rather than cutting the cow and having the meat from it, or we can use it for anything else. So I would rather raise the cow, feed her good, and take out the milk and make money from the milk. So it's called, all the dividend stocks are kept as an asset, and the dividends that come in tax free, those become as cash flow. And over the long term, how I plan to do is replace my active income with the passive income that will be coming in from the dividends, and that too all tax free. So that's one of my goals that I follow. And so this was the case of Warren Buffett. We don't see, means we can't see a Coca-Cola stock every day, or it's hard to find such kind of stocks. So how I see right now, means if I have to look for a dividend growth stock. So let's take an example of the stock Visa. Everybody uses the Visa cards that we have from the banks, and means everybody on the call will be familiar with the Visa company. So currently the yield is pretty much around 1% or something around 0.97%, and their payout ratio. So every dividend company has a payout ratio, how much of the dividends they pay out to the shareholders, and rest of the profits they either reinvest in the company, or means whatever the company chooses to do. So Visa is a great opportunity for dividend growth investors. So the stock price has seen huge appreciation over the last decade when the stock market was in the bull run. So it rarely goes on any discount or sales when the price really dips. It only saw the dip when there was the market bottom around the March end, and we might see some small dips going ahead. But over the time, so the yield will increase as the dividend will increase, and the starting yield, for example, we get into Visa today at $150. So let's say the stock price is $150 and they pay out a 1% dividend. Over the years, they will be increasing their dividend history, as they want to be among the dividend aristocrats or the dividend kings. And when the dividend increases, our money will be compounded over the time. So that's the beauty that comes in long-term investing. That's called compound interest. Means in Asia, we have our banks that pay us interest, and over the time it becomes compound interest. The money that we originally put in makes some money, and the money that we made from our original investment makes us more money. So that's how it happens. So that's basically dividend growth investing in a nutshell. So if our participants wants any recommendations from my side, I can share some recommendations on dividend growth investing. And if anyone has any doubts or any questions for me regarding that, please feel free to answer.
Hi Akash, this is Aditya. Firstly, thank you for giving us this introduction and the information about the dividend stocks and how to go about it. So
Yeah.
one thing what we wanted to understand is, how are we going to identify a certain stock? I know, as you mentioned, every stock cannot be like Coca-Cola where it goes from $2 to $60, but how
Yeah.
is it that we're going to identify, especially when, say, in some instances when initially the IPO is going to be launched, or when it is at a lower price, when we know this is the future for it? How do we go about those?
Yeah. So, means great question, Aditya. So originally, when we see an IPO, from an IPO, we can't say whether this stock will be a great dividend stock, because the company hasn't shared any plans for the dividends. We see Google, Facebook, they are huge technology companies. They have Google almost has 1 trillion market capitalization, and even Amazon, but they don't pay dividend. So there are certain cases that can look for price appreciation. Like I think Airbnb is a IPO that is coming up this year, and certainly it will be a long-term hold, and it will skyrocket. But many IPOs are there in the current scenarios, or they have been launched, or they were launched around 2 years back, like the wheat stocks. We saw huge buzz around the wheat stocks in 2018, and this skyrocketed. And what we see now is like they're down 50% or still 40%, and the companies aren't even that profitable as of now. So on an IPO, it's really hard. But if we talk about normal dividend stocks, So there are certain 4 or 5 steps that we can follow, looking at the payout ratio. If a company has a moat, like for example, let's use the tobacco industry. So there is a company called Altria Group. It's traded as MO on the New York Stock Exchange. So to make a cigarette, it just costs cents and the raw material is cheap. But when it goes into stores, it sells as dollars. So if we see the basic consumer behavior, so smoking isn't something that's going away. It's addictive. Even people smoke more in COVID times because they're full of stress. And on normal days, they just smoke out of sheer pleasure. So certainly some companies are to be looked at from a consumer point of view. So a company that has a moat as in technical advantage over its competitors. Like Google has all the ads on internet. No company can uh, means they can't go against them and shaken their foundation. And another example can be like the telecom industry in Canada. We know that there are three main players: Telus, Rogers, and Bell. So a company cannot enter straight away into telecom industry and beat all the three. So this is called a moat, like the companies that have. And there are certain like I'll use another example here. Sorry if I'm going over time. So few months back, Warren Buffett invested in a company called Occidental Petroleum. So he's a preferred shareholder in that. So there are common shareholders like us, normal guys, and there are institutional investors who are preferred shareholders. They get preferred stocks, and uh, Warren Buffett has a contract with the company where he invested $10 billion into the company, and he had 8% dividend yield. So people like there are many people on the internet who go blindly like follow Warren Buffett and whatever he picks, we'll pick, and we'll see our money grow like he's a billionaire, and in 30, 40 years we'll be a billionaire too. But that's not the case. So what happened in Occidental's case? So they were already struggling, a struggling company. They were looking for someone to invest in them, and they made a bet, and the bet went against them. So what happened? The coronavirus pandemic hit, and now in today's current scenario, Occidental has got 98% of its dividend for the common shareholders, and the stock price has gone around 60, 70% down. So those people who blindly followed Warren Buffett at that point of time, they have lost 70% of their money, and they have also lost the 98% of the dividend that was paid by the company. But on the other hand, Warren Buffett is still getting his 8% that no other investor would get, regardless of the company's situation. So these are some red flags that we can see for dividend stocks. So I would say personally, when we are looking for a dividend stock for a long period of time, it should be a sustainable business with a competitive advantage over its other competitors. And yeah, it should be sustainable for the future. Yeah.
Thanks for this, Akash. One more question is,
Yeah.
I know you also mentioned that if we need any advice on what stocks to invest on, so you would be guiding. So just wanted to check, are there any on your mind, taking into consideration the COVID scenario, which are at a lesser price at the moment, or say, even if it at a higher price, we can buy it, but in the future, it might go at a much higher level. Of course, we are not going to hold you accountable for it. We are going to do our due diligence, but just wanted to understand like what are those ones that we can look at.
Yeah, certainly, Aditya. A really good point you mentioned that always do your due diligence. I can give you 10 stock recommendations right now and that you can invest in. But at the end of the day, it's your money and it's your decision to make. I mean, if you Google dividend stocks recommendation, you'll get tons of them right now. But at the end of the day, it's your money and your decision. So if there are 13 sectors in the stock market, if you name out a sector, I can give you one recommendation from each one. Let's say utilities. So utilities is the most defensive stock. I mean defensive sector in the stock market because regardless of any recession, whether it's a banking recession or it's a coronavirus. So we have to pay our bills. We have to pay our electricity bills, our water bills, our gas bills. So there are certain utility companies that have been paying out dividends for long term in the Canadian market, and they have a strong market throughout the North America continent, and they have great assets. The number of assets over the number of liabilities is huge. So there's a company called Fortis. It trades on the ticker FTS. You can look it up. It has a dividend growth history of 46 years. And in the utility sector itself, it has outperformed all the competitors, and even it has outperformed the TSX index. And its all-time highs were around $60 Canadian. And see, we have certain bank stocks that are down 30%, or like they even went 40% down. So Fortis was the least hit. It only went down on the peak when we saw the market getting to the bottom. It only was down like 10 or 15%. And it speaks volumes about their business model and the type of company they are. Does that answer your question, Aditya?
Yeah, it does, Amandeep. I think I don't want to flood you with too many questions, but I think it would be beneficial, say, in the WhatsApp group or something, if you can just provide us with a list of the stocks, because that will be for everyone. Because if anyone misses, like in terms of, say, in utility sector or in banking sector or in telecom, so that again, you can always let them know, or let us know that we would need to do a due diligence so that we can look at it. And then if you have any questions, we can always get back to you if that's okay with you.
Yeah, certainly, always. So what I'll do is I'll share some stocks regarding the sectors. I'll take up each sector and I'll write down one or two recommendations that I personally invest in, and I feel that they would be doing great in the future. And rest is up to the people who are investing. And the main point, do their own diligence.
Sure. Thanks for this, Akash. Thank you very much.
You're very welcome. If anyone else wants to ask any questions, or else it's up to you, Kamal.
Yeah. Thank you so much, Akash. It was really good learning about dividend growth investing. Thanks for answering questions from Aditya. Aditya, thanks for your really wonderful questions. So I think we can now move to part 2 of our session, and I'll hand over to Tahir.